Hi, welcome to the Daily Market Commentary with me, Jan Muta, Chief Market Analyst for TIOmarkets. And I'm first of all reminding you that we don't provide investment advice and all the views expressed in this presentation are our opinions only. It seems that the US Congress agreeing on stimulus before the US presidential elections is quite unlikely. And this might be one of the reasons why there was a widespread sell-off in the US stock markets yesterday, and we had especially volatile session in technology stocks with Tesla gapping lower by 15% or so and ending the day lower by I think 20 something, 21% perhaps. And at the same time, global demand for oil is so weak that even if Saudi Aramco is selling oil at reduced prices, not all the major buyers in Asia are increasing their purchases. And this helped the oil market to hit our target of 36.30, which we talked about in yesterday's video. And another major headline today is that the UK's head of government's legal department, Jonathan Jones, has resigned. His resignation underlines the fact that traders and market participants are quite worried about how the UK's economic situation will develop if they will leave the European Union without a deal at the end of the year. So this is a major news that helped us again with our market views. We said yesterday that cable is likely to move lower because of this, and our idea of selling at 31.59, 1.3159 area worked out beautifully. The market, when I came to my desk this morning, market was trading 190 pips lower. So it really is worth following these videos, and I hope that you will share these with your friends. Give us a thumbs up in YouTube, and I look forward to bring many more videos in the future. Let's look at tomorrow's macroeconomic events. And yes, we have rate decision from Bank of Canada today, I think it was, and ECB rate decision tomorrow. So at the same time, we have the US PPI and core PPI, unemployment claims and crude inventories. So stay tuned and follow the markets. Now let's take a look at charts. So in yesterday's analysis video or market commentary video, I was talking about oil moving lower. It was trading around 38.50 at the time, if I remember correctly. And I was using the channel width here, the width of the channel, to find out a likely target for oil. And I was pointing out to this area where we have this low from June 25th of 37.10 and the Fibonacci retracement at 36.30 or so. The market pretty much moved exactly the distance, the channel width distance, and came down to 36.15 before bouncing higher. Now it seems that the next relevant resistance area is somewhere up here, and should the market move lower, we have the next support at the 15th of June low at 34.30 area. Let's see what's happening with the dollar. Let's see what's happening with the other markets. We've clearly had some risk-off sentiment lately. So at some stage, market will snap back. Now we've had in oil 1, 2, 3, 4, 5 days of solid down movement. So I wouldn't be surprised if we had a bit of a bounce going higher, going against this move now, especially as market just moved a measured move down and found some support here. And here we have EURUSD, we have been following this market. Obviously, it's one of the key markets, but we've been following it lately quite often. And the market broke below that rising trend line support here, the short-term sort of channel here. And it's now flirting with the long-term channel low that coincides with recent support from 21st of August. And obviously everybody's focusing on what's happening with the ECB tomorrow. We have the ECB rate decision coming up. Nobody's expecting anything else but zero. But let's see. We never know what the actual numbers will be, and we never know either how the market will react beforehand. So we always wait for the number first, and then we wait for the price reaction to see what the market is really thinking about the news. So we have key levels that haven't been violated yet, so the market is technically still in an uptrend. We just have to see how the market participants will react to the ECB decision tomorrow. Here we have the performance chart where I have all the main currencies against the US dollar. This performance is from the point that we got the NFP numbers on Friday. And as you can clearly see, it's been the yen that the markets have favored, and pound has really taken some pounding, so to speak. And now at the time of recording this, we have a bit of an intraday rally going on in commodity currencies. We have CAD, New Zealand and Aussie trying to turn higher. We have a higher low in Aussie. This is a 30-minute chart, so it's very much an intraday chart. So you should always see where the higher time frame levels are. But I'll show you some of those once we move into sort of daily time frame charts. And here we have cable that we yesterday said should be sold at resistances. And I identified in yesterday's analysis that this area between from 31.59 to roughly 31.74, I think I said yesterday, that this area is likely to be a resistance. And the red arrow here points to the time when the market rallied exactly to 31.59 and has since then sold off heavily, and it is now trading at 29.56. So the market has moved considerably lower, really highlighting the worries that the market participants have regarding the new stance taken by the British Prime Minister and his cabinet. In yesterday's analysis, I was looking at this low here. That was a potential support, and I thought it was quite significant support as well, because we also had a sort of Fibonacci area coming together there. We had a couple of Fibonacci levels coming there. So there was this cluster of Fibonacci levels and a historical low there, which basically I thought would give us a bit of a bounce in the market. And if we look at what happened, the market came down to the level to 30.07. It came into the zone, bounced roughly about 50 pips. So some traders were obviously able to make some money from there, but then the bears came into the scene again and started selling and took the control of the market, and it moved below the level. So at the moment, pound is a little bit, it's struggling here a little bit. Let's see if we get another lower high, which keep this market in sort of downward, would keep the downward momentum on. My idea is that, from the experience, I've been in this business about 20 something years, and my experience is that it always pays to go with the flow. If you start fighting against the market, you will it's just very, very hard to succeed. So look for further confirmation on trend continuing and then take advantage of the current momentum. And if you want to learn more, come to our webinars, TIOmarkets.com/webinars, and I'll be happy to talk through very efficient strategies on how to manage the risk and still stay in the game, because that's, at the end of the day, is the name of the game, that to stay in the game. If you take too many risks, it'll be impossible for you to survive long term. There are some fantastic traders that are fantastic for a short period of time, but then they don't last long because they take oversized positions and they don't limit the risks. So all this is so important. It's too short, too much to cover in this short video, but I'll be happy to help you in the webinars to learn how to increase your success rate, how to become a better trader. Here we have S&P 500 index futures in the daily time frame. I said yesterday in my analysis video that basically I don't think the stocks are ready to move higher. The market was somewhere up here at the time, and I thought looking at the different time frames that it doesn't make sense to believe this market is going higher. And I said yesterday, because we're close to a recent, let's go to the weekly chart, we were at this high. I said that I expect the market to consolidate a little bit. And usually consolidation means the market goes and tests the recent lows and then moves sideways. This time market went a little deeper in yesterday's trading and today also. But it seems that there's a bit of a rally going on at the moment. It seems that the sort of penetration of this upside or sort of upward pointing trend line support, and at the same time the 50% moving up, 50% Fibonacci level and the historical important technical level potential support, these things coming together, and the fact that the market has been moving lower for 1, 2, 3 days in a row makes the traders think that this sell-off might be getting to levels where it's overdone. So again, let's follow what the market does, and I want to show you one more important chart related to this. Let's go to VIX, which is the fear index. I will explain in future videos how this index works, but it's suffice to say that it follows the implied volatility in S&P 500 options. So because you can buy options that profit from down moves and you can buy options that profit from up moves, this index looks at the relationship between these options that are being sold. And basically I'll show you what's happening there because it's a major index that should be followed. Just a moment, please. And here we have VIX. It's basically a very different market, as you can see, compared to any other markets, but it's still a tradable market. There are nowadays a lot of different vehicles for trading this, but at the moment, the main message for us is here. Yesterday, VIX made a lower high. So it is possible. I can't obviously promise. Nobody knows what's happening in the future. This market could bounce higher and then move lower, which would imply that the S&P would move lower before it can move higher. But this here is an indication that there might be a bounce ahead in the US futures. It's still not sort of confirmation to go long. You need to see the confirmation in the S&P 500, Nasdaq and Dow Jones index futures, but this is one of the first indications that the market is not as nervous anymore as it was before. And very briefly before we finish, I want to show you some currency charts. Yesterday I was talking about this indication of buying coming in to Aussie USD. This spiky candle here tells you that the move down was rejected, but then I was also pointing to the fact that the market was kind of sluggish. It was struggling with this resistance up there, somehow created by this moving average, 10-period moving average there. And I was expecting the market move higher from levels above this low, but it's instead dropped down to the rising trend line support that we had in place already yesterday. So it just shows you that even though we have some exceptional trade setups that work nicely, there are times when market moves different to our expectations, and that's why we need. Everybody needs good, solid risk management strategy. And yes, nobody knows the future, and so we just have to do with the probabilities. And if you have more winning trades than losing trades, then your trading business is on the right track. So at the moment, we have a bit of a rally, like I said earlier, in commodity currencies intraday today. So looking at this move higher, the next resistance is obviously here somewhere around this area. And if this breaks, then we have a next support here with the moving average, 50-day moving average, coming to the same area here. But obviously, to trade those, you need a strategy that takes into account multiple time frames. Let's go and see the other currencies. USD Swiss has rallied to a level where several things come together. We have a real technical confluence area there. We have the high from 12th of August. And let's see, what was this level? It was exactly... the high was exactly, yeah, there it is actually, 91.98. Then we have the 50-day moving average, and we have the channel high there. Plus we have the stochastics indicator pointing that we are in the upper end of the range and losing momentum. So if this loss of momentum continues, then there might be an intraday trade, or at least down to some of these potential supports here. Or if the market continues lower, then, and if it doesn't show signs of consolidating and turning higher again at this level, at this range, then there is probably further movement down to 0.9 area. USDCAD has also run into a resistance. It broke out of the channel, and now it hit these resistance levels that we already identified some way back when we were looking at this currency pair. It was trading somewhere here on August 26th, and I then suggested that it should be moving lower. Now this move is over and the market has retraced to the highs that we identified at the time. So this might be another area where we have a market reacting lower, USDCAD reacting lower, but then the next potential support is here at the sort of 31.60, say the high exactly is 31.62. So 1.3162 is a potential support if the market corrects lower now. And the last currency pair that I share with you today is EURUSD, that has created yet another higher low. Basically, there's one there's actually here the first, second, third, and now yet in yesterday's trading there was yet another higher low here. So it sort of suggests that we have a big reversal going on in this currency pair. Looking at this, we had down move and then consolidation, upper higher lows here. So I wouldn't be surprised if the buyers came in somewhere above this low of 61.80 and took this market to somewhere up here, somewhere, say there's a resistance there, 64.08. So if the market retraces and gives nice signals that it will turn higher from here, I think there's an opportunity to see this market going to 64.80 area and maybe higher, who knows. But this is what I want to leave with you. It's been a long video today, but there's so many markets to cover, and I hope that if you enjoy these videos, if you find them useful and helpful, give me some feedback, give us the thumbs up, and please share the videos with your friends. So thank you for this, and basically I look forward to seeing you soon again. I actually almost forgot this, so just a quick reminder, we have Bank of Canada rate decision coming today and the ECB rate decision coming tomorrow on Thursday. And then we have also the US PPI and core PPI, unemployment claims and crude oil inventories. So very much thank you for your time. It has been a pleasure, and I look forward to seeing you again tomorrow. Trade safe.